Market wrap up, everybody. So stocks closed marginally higher. We were down most of the day. We had a rally late. This has kind of been the pattern every time it has been down. So that's what happened there. Not a big positive close. About up 4 on the Dow, S&P a couple of points up. What else? Fiscal flows. I sent out an email on this earlier. If you want that email, if you don't have the 30-day free trial, go to my website, pitbulleconomics.com, and just click on right there on the home page. It says get the 30-day free trial. Fiscal flows are negative year over year. I spoke about that yesterday. We are down about 35, 36 billion versus last year. Now that's a recent development. We had been positive since the end of December all the way till about a week ago. And now we are running pretty big negative. That's the 30, I think it's 36 or 35 billion negative. I forgot what the exact number, but it's in the 30 billions negative year over year. And that is due to the IRS tax refunds. They're still just kind of coming out at a trickle here so far in February. Now, February is a big, important month. I mean, that's the month when you get the bulk of the IRS tax refunds going out. And February is the single biggest fiscal spending month for the government. Last year, we did over 500 billion in one month. Okay, a normal month could be anywhere. Could be 320, 350, sometimes 370, sometimes 280 billion. All right, so we did over 500 billion last year in February. Now, those tax refunds, I told you they were being held up by a new law which went into effect this year, which the IRS has to hold some refunds for a longer period of time. It's designed to work against tax fraud and identity theft, all right? But that was supposed to be February 15th, the date when the funds start to get released. But it's been a trickle. It has been a trickle. Now, people wait for that money, all right? People definitely wait for that money every year, and that money is then spent, and that, means firms feel the loss in sales as a result of these slow tax refunds. So I do not see the negative fiscal flows as something, benign. I see it as a negative. And it's going to show up in the economic data. Next week, we don't have a lot of economic data. We have a couple of things: existing home sales, new home sales, University of Michigan final sentiment for February, and the FOMC minutes. So not a lot next week in terms of economic data. The other thing I want to point out is that the data from the CFTC's Commitment of Traders report, which just came out a little while ago, we see that the institutional asset managers, they bumped up their long S&P position even higher in the last week. They're now long, net long, and again, that's longs minus shorts. They're net long 600,000 contracts. And by the same token, the swap dealers, those are the Wall Street firms, your Goldmans, your JP Morgans, your Morgan Stanleys. They are net short 245,000 contracts. That's their biggest net short position so far. So you got this kind of, speculators are short, not by a lot, but they are short, and they have been short. But it's really these institutional asset managers, they keep adding to that position, adding to that position, adding to that position. All right. So you have this, it's like pressure building up. It's a massive long position on the part of asset managers. And again, I've said in the past, all right, these are the guys who historically fail to beat the market averages. So if you bet with them, just keep that in mind. I mean, these are people who have a major commitment long in the market right now. And these are people who have a very strong history of not even beating the market. All right, so I mean, take that for what it's worth. Gold pulled back a little bit today. The gold rally is a beautiful rally. It's a type of rally that I would call a very healthy rally. It keeps people skeptical, not believing in it. And this is why I think it has quite a bit of legs, not to mention the fact that the fundamentals are behind it, okay? Same with the dollar. People still thinking, hey, they're going to raise rates, even though, I talked about this yesterday. How many times you got to see When they raise the rates, the dollar goes down, but that's okay. That's money for me. So that's it. No trading on Monday, but I will be putting out the MMT Trader Report. Go get the 30-day free trial. Go to pitbulleconomics.com and click on the tab that says products, or actually right on the home page there, it says get the 30-day free trial. Some of you have been asking about my courses again. If you go to pitbulleconomics.com and you click on the tab that says courses, they're all there. There's the Forex course. There is Understanding the Daily Treasury Statement course. There is the MMT Stock Value Selection course. And there is the special 3-course bundle. I sell all 3 of those courses for $295. So that's a big savings. And you get all 3. You could study them. And that's about it. Have a great weekend, everybody. MMT Trader will be out on Monday. Even though it is President's Day, I will be sending it out on Monday. Have a great weekend. Bye-bye.